recipes for technical trading success in Cook's Kitchen.
Have you heard the phrase, software is eating the world? If you're a tech investor, you probably have. And we're going to talk about it today, why software is eating the world. And if you've never heard that, please pay attention, because it's a philosophy that can make you some money as a tech investor. All right, why software is eating the world was an essay in the Wall Street Journal in 2011 by famous tech investor and venture capitalist Mark Andreessen, the guy who invented the Mosaic browser and Netscape back in the 90s, sold it to AOL for $4 billion, and now he's a VC that's probably in every big IPO that has come in the past 10 years, from Google and Facebook to now Lyft and Uber. All right, and the reason he said software is eating the world is because he just saw the platforms taking over, what Google was able to do, what Amazon was able to do, what even Microsoft, Adobe, and CRM were starting to do. And he saw that trend accelerating. So, and what's happened out of the bear market lows of December is that not only did semiconductors come back strong in the tech supercycle, but software made new highs too. I want to show you a report I wrote just this week called "The Tech Supercycle Continues." This was a sort of a part two of a report I wrote back in 2017 about the tech supercycle, where I focused a lot on semiconductors and a little bit on biotech. But in this episode, I focused on software. And I want to show you one deal that I talked about. So here's my chart, the XSW. This is the equal weight software ETF. It holds over 155 companies. There you see it making new all-time highs above Q3 of 2018. Ignore that algo spike there. But anyway, XSW, it's this S&P software ETF, over 155 companies. In this report, I also talk about NVIDIA because the hardware they build integrates with different software stacks. All right, so I want to show you a deal that happened. Ultimate Software Group. This is a company that specializes in the HR area of software. So you got companies like Workday, Paycom, and others. Private equity just took this company out for $11 billion. And what multiple did they pay? They paid 8 times sales. So private equity, all cash, $11 billion, and they're paying 8 times this year's projected sales of $1.4 billion for Ultimate Software Group. To me, that says a lot. And it doesn't, I sometimes say it puts a floor in valuations, but it does put some kind of support for valuations where in a space where companies are trading at 10, 15, 20 times sales with no earnings. And I sometimes compare software to biotech for that reason. Okay, so remember Ultimate Software Group, the ticker ULTI, taken private by a group. Hellman and Friedman is the main PE underwriter, but I believe Blackstone's involved, and some other groups. All right, so what I want to do now is I want to show you, I want to talk about IPOs. Not ones that are coming and not brand new ones, but 2 software IPOs from last year that I think are underrated and investors should pay attention to them. And I happen to own them both. One is Smartsheet and the other is Domo. So let's take a look. So here's the chart of Smartsheet. Just over a $4 billion market cap, IPO'd in May of 2018, and I'll show you what they do. So they have a platform that integrates all of your other platforms. So they show, they're bringing together all your projects, calendars, dashboards, etc. And they can integrate stuff from, say, Salesforce CRM, other databases you use, and these are some of their customers. So Smartsheet is kind of a cool applications platform that brings everything together for companies, small, medium, and large companies, to integrate their data so they can work with it when data is coming from different sources. All right, the next company I want to show you is Domo. Domo is a small cap. It's only like a 900 million market cap. Just IPO'd last July, trading $36 here, coming back to its 50-day moving average. It doesn't even have, it just started a 200-day moving average. You see right here, this little blip, 2365. It just began its 200-day moving average because it only has 200 days of price data, or just over 200 days. So Domo, what do? Well, they also integrate data and platforms, but they do it sort of like Tableau, the data visualization company. So they take your data and then let you analyze it, process it, organize it, and visualize it, and create not just spreadsheets, but graphic visualizations, charts, 3D stuff. So that's what Domo does. Interesting pedigree for Domo is that the founder is a guy his name is Joshua James, and he's doing a ton of stuff in Utah, which is where he's from. He went to Brigham Young. He actually dropped out of Brigham Young in his last semester, so he didn't graduate, to start Omniture. Now, if you're in web analytics at all, you know what Omniture is. They find ways to tell you what is your traffic, where's your traffic coming from, and measure it in all sorts of ways. He finally sold that company to Adobe in 2009 for $1.8 billion. And then he started Domo. And I think Domo's got a lot of runway here at a sub $1 billion market cap. Sales are going to approach 200 million this year, so trading about 5 times sales, which is low. Smartsheet is also in the single digits there, below, I forgot exactly, maybe it's 6 or 7 times. But so to me, these are small, under-recognized relative values that are growing their sales at over 20%. So I think they're going to be on the radar of a lot more investors and bigger companies. All right, so I gave you my theory on valuations about why, in some ways, some of the software can trade at biotech valuations, right? No earnings and 10, 15, 20 times sales. It's happening all the time because software is so different. Software, because it's, it goes beyond time and space, it may give us more of both of those dimensions. And there are infinite variations of it. Think of it just like songs or stories or scientific experiments. And that's what I talk about in my special report. If you want to get that special report from Zacks Confidential, the tech supercycle continues, just email ultimate@zacks.com and they'll hook you up. All right, one last company I want to talk about is a bigger company, but I think it's unique, and it ties in software and biotech. And that's Veeva Systems. Was making new highs here this week above 135. I also own this for my Healthcare Innovators portfolio. This is almost a $20 billion company, but they specialize in information systems for biotech. So they help a biotech company set up everything it needs in terms of data collection and organization and analysis and FDA trials, so that they're on the right track with their data. So that's what's unique about Veeva Systems in software, and why I chose it for Healthcare Innovators. All right, that is my spiel on software eating the world, why it will continue to eat the world, just like biotech. Pay attention.